For those who sold in May and went away, might it be time to start buying stocks again here at the end of October? Sure, our chief equity strategist and economist, John Blank, has that answer. He joins me now. John, what do you say? Is it time to buy stocks now especially going into the end of the year?
I think so, Terry. Look, you got to buy when the market feels uncomfortable to get good prices. I would tell people, though, that we're still at not very attractive valuations, just more attractive. There's probably more to go down than up, but calling these turns is impossible. So some allocation and some risk taking should take place.
So let's look at both sides of the story. First, what's the bull story on the market?
Bull story on the market is the earnings are good and the economy, as we learned this morning, is strong. That's it.
And then on the flip side, what's the bear story?
The 10-year treasury is at 5%. That's it. I mean, the basic point of a 10-year treasury rate at 5% is from the 1 year to the 10-year, you can get a brokered CD for 5.5% for the next year or 6 months or 2 years, and not sit around and prognosticate like we're doing right now about the direction of stocks in the economy.
Yeah, so about that, the stock market story lately, as you said, seems to be about yields. And given the recent spike up in yields, you think the bond market is going to keep stocks range bound for a while?
I think so. I mean, I think until we finally get confirmation that the Fed is going to lower rates, which the bond market will forward read in advance of that, I think we're going to be struggling with this market.
Fed Chairman Powell recently signaled that the Fed is still committed to rates being higher for longer. Does that mean that we shouldn't expect the Fed to help stocks at all?
Yeah, basically, the Fed is not in the business of promoting asset bubbles. They have a housing bubble, for sure, and they need to unwind this stuff. But it's very unlikely, given that effective mortgage rates, not the actual federal policy funds rate, is 3.5%, 4% because everybody's sitting on their mortgages. The basic problem Paul has is he's not going to be very effective outside of maybe auto finance.
So should investors consider maybe throwing some bonds into their portfolio mix now?
Yeah. I mean, 1 and 2 years, and in the brokered CD market, which is effectively a bond, are things people should look at. Yes.
What role is the latest geopolitical situation playing in pressuring stocks?
Frankly, less than people think. You got to remember with the Hamas-Israel conflict, this is something that's gone on for 75 years, and it's a relatively small country. In the terms of the Ukrainian-Russian conflict, that has also been going on for a year and a half and has been fully priced in. So neither of these are central to the U.S. economy and its stock market. That needs to be reminded. We have always been in a different continent and oceans away from these types of places.
Companies have reported earnings beats both on the top and bottom lines so far this earnings season, but that doesn't seem to have helped stocks at all. So is that also indicative of the bond market's effect on stocks?
That is it. The bond market is calling the tune, and it's doing it because valuations are still on the high side, and that means the higher valuation stocks are going to be pulled down with people selling and taking profits on them.
Investors still expected, though, to keep their eye on the big tech earnings that are coming out. Here are a few infotech companies on your radar, though. Cadence Design Systems, Splunk, and VipShop Holdings.
Yeah, so let's talk Cadence Design Systems, ticker CDNS, $232 a share this morning. Cadence Design Systems in San Jose, and it's just this amazing company that does what's called System Design Enablement, SDE. Basically, you give them a major infotech project from chip design all the way through the software to its delivery, and they take it on for you. Amazing stock, B for growth, number one rank. It's actually pulled back a little bit here. Interesting to know them. We gotta love that stock. Splunk, ticker SPLK. This is a number 2 rank with an A for growth. Splunk is, it provides software solutions that enable enterprises to get in market intelligence by harnessing the value of their data. So Splunk was a big one before the COVID pandemic and has come back since people are now back in offices and using it, in the hybrid situations. Great name, interesting stock, ticker SPLK. And the final one, ticker VIPS, is actually a Chinese name. I bring it to your attention because it's $14.50 a share. Earnings estimates are strong. Forward P is 7. But what makes it interesting, in my opinion, is in this year's time frame, when almost every major mainland Chinese stock ticker has sold off, this one has actually risen. So the market's a forward-looking indicator, and if people are buying VipShop now, you got to like that name. So A for value, A for growth, A for momentum, ticker VIPS.
Our chief equity strategist and economist, John Blank, talking about the stock market story with John. I'm Terry Ruffalo. Here's something you might want to check out. Just released 5 stocks set to double. That's a report where 4 Zacks experts each announce their single favorite pick with the potential to gain 100% and more in the months ahead. You can download the private special report that names these stocks and spotlights why their upside is so exceptional at Zacks.com/promo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.